This is your technical update from the LMAX Exchange Research and Analytics Desk for Monday, July 11th, 2016. Euro dollar. So it looks like the euro is carving out a lower top at 111.87, and this will be confirmed on a breakback below the 24th of June low, which comes in around 109.12. A break below 109.12 will open fresh downside towards key medium-term support at 108.23. So at this point, only back above 111.87 will take the immediate pressure off the downside. Sterling dollar. So cable remains under intense pressure, though we have seen the market stabilize a little bit in the previous week. But overall, the pressure remains on the downside, and the market is contemplating a test of next key psychological barriers at 125. Sterling dollar is at its lowest levels in over 30 years, testing levels back towards the 1985 June lows. At this point, a break back above the previous weekly high around 133.40 will be required to take the immediate pressure off the downside and suggest the more intense reversal or a correction is playing out. Dollar yen. So dollar yen remains pressure to the downside with the downtrend firmly intact, and the market considering the next downside extension below recent 2016 lows at 98.99. A break below that level will set the stage for a test down towards the 93 area. At this point, it's going to take a break back above 103.40 to take the immediate pressure off the downside. Euro Swiss. So Euro Swiss continues to be very well supported on dips, and the market is looking for another bounce, potentially taking it back towards the recent range highs in the 111.30 to 112 area. At this point, only a close back below 107 would give reason for concern. Aussie dollar. So Aussie has seen a nice little rally in recent sessions, though ultimately the market could stall out again if it is unable to break back above 76.47. A break above 76.47 would negate any bearish outlook and open the door for a retest of the 2016 high. But if the market does stall out ahead of 76.47, the pressure remains on the downside, and we could be seeing a lower top here ahead of the next major downside extension back towards key support at 71.45. Dollar CAD. So dollar CAD continues to show formation of a major base, but this will only be confirmed if the market can take out key resistance at 131.89. Look for a break back above that level to open the door for fresh upside towards the 135 to 140 area. Only back below 126.55 negates this outlook. Kiwi dollar. So Kiwi is now broken up to a fresh 2016 high above 73, and the market could now be poised for a run towards 75. But overall, the longer-term downtrend remains intact, and so we could see the market stall out over the coming sessions. A break back below key support right now, which comes in around 70.80, would be required to take the immediate pressure off the top side. SPX 500. So the S&P 500 is back to trading at record highs, testing those record highs from 2015. And if we establish a close above 2133, this could open the door for a move up towards 2150 to 2200. However, inability to establish a close above 2133 could suggest the market is continuing this process of a major top in favor of an eventual break to the downside. Look for a break back below initial support, which comes in at 2095, 2094, to take the immediate pressure off the top side and open the door for a resumption of declines. But inability to do so does keep the pressure on the top side, with the market potentially looking to establish fresh record highs. Gold. So the outlook for gold hasn't changed in recent trade, with the market continuing its ascent towards a key measured move objective at 1400. Look for any setbacks in this market to be very well supported ahead of 1300, while only back below 1250 at this point would compromise the highly constructive outlook for gold.